Hello everybody, welcome to the TraderMerlin Show. It is your Wednesday Hump Day edition. We're going to have a great show today with David Warner. Before I get to David, though, I missed something, literally the last second of yesterday's show. I went through this long show, which I thought was interesting, about building a computer for yourselves for trading. I forgot to show you one resource, and here it is. It's a website called PC Part Picker. I know it sounds really weird, but if you're going to build yourself a computer, this one was absolutely critical to me. If you go here to System Builder, what's great about this is you can say, oh, I want to use the AMD chip, and you can put in, here's the one I was talking about, the AMD Ryzen, right? So you can add that to your system, and as you add in pieces, it'll tell you if it's compatible or not. So when you go to your Micro Center, your computer store, you know everything is legit. It also tells you your estimated usage and wattage and all that stuff. This is absolutely critical. Sorry I forgot it yesterday. That's done. Now we can move on to something else. Today's show is going to be not just trading the Brexit. I just wanted some nice catchy graphic here, which certainly will be a focal point because the Brexit has been of topic and it's going to start becoming more and more extreme as we come near Christmas and the end of the year. But David Warner, master of the quarters theory, will be joining us today. Without further ado, here is Mr. David Warner. David, how you doing today?
Hey, Merlin, how are you? I'm well, thank you.
I'm great. And happy Veterans Day to all the veterans out there, including yourself, David. Thank you for all your service.
I spent a few years in the Air Force, yeah. You can't tell by the way I look right now, but yeah.
Yeah, you're going the opposite direction. I don't think they would allow that in the Air Force, right? It like gets in your eyes when you're flying planes and stuff.
You never know. 2020, 2021, we are moving. You'll never know. You'll
never know. I got to give props to everybody out there. It's funny because when I was 18, I actually went to the Army recruiting office, and I don't know why. I just wanted discipline. You know what I really wanted? I wanted boot camp. I wanted some place where I was working out all day, eating, and had a direct regiment. And they like, well, you can only do 4 years. I said, can't I do like 2? And they go, no, you can only do 4. So I ended up not doing it. Probably for myself, I don't know. It was probably, I don't know. It could have been good or bad. But all the veterans out there, thank you so much for all that you do. I see you got the American flag in the background up there as well.
Proud American.
America. And by the way, guys,
Real patriot.
I do have to dispel this rumor right now once and for all. This beautiful flag right here, this does not mean that anybody is a Republican. It means that you are an American. You can be a Democrat, an independent, a libertarian, and still hold an American flag. That one was driving me nuts. Like, well, if you don't have an American flag, then you're a Democrat. It's like, come on, guys. Let's stop with this. It's America. All right. Let's go to the Brexit thing since we're talking about countries separating. We, of course, know that in 2016 there was the vote to leave the European Union on the part of the UK. And that has been just going on and on and on, almost like an episode of The Bachelorette. It just never seems to end, yet there's lots of drama along the way. What's the latest update with regards to Brexit, David?
I thought it was going to be wrapped up in October, and they kicked the can down the road, and then it was supposed to kind of wrap up this week. But they're making progress, so it looks like it's going to carry over into next week. Right now, the current deadline is November 19th. So if they don't figure out what it's going to be on November 19th, then essentially they feel like it's going to be a no-deal Brexit. Both sides are very optimistic about it right now. I'm pricing it as a deal. I'm going to share a screen with you.
Yeah.
I'm going to share. Here's just the pound dollar. I'm going to just basically just draw a couple levels here, a couple lines. Hold on. So I'll just put like put $1.30 here, and I'm gonna put like $1.35 right here, 0.0, and I'm gonna put another one right here at say $1.25. So the idea here, the way that I am playing it, I'm optimistic for the deal. Right now, like it's really hard just to look at pound crosses and just try to trade them with just like a technical backdrop, because you can't really price in deal or no deal, kind of ahead of time. So it's like you have this like to just try to say, okay, well, this level is clean, this level is fresh, and I'm just going to kind of play that. Right now, I'm playing optimism for a Brexit deal. I basically have been trying to play this $1.30 level. I'm a constant optimist, just that they're going to get a deal. So it's like every time it kind of peeks its head above 130, I basically have been trying to buy it to get to $1.35. Here's shot one, didn't work out. Shot two, didn't work out. Shot three. And then this is like my fourth shot, basically trying to get it. But the risk reward is great because you have 500 pips between 30 and 35. I basically do it with 50 pip stops. I only really have to hit, one out of 10 here. But if you're not really in this trade yet, I don't know if I feel like you talked about didn't you have someone write in on a level on this?
Yeah, I'll bring that question up here and find which one that was. That wasn't Terry. By the way, we got a whole bunch of questions there. Irene sent this one in. It says, I'm looking at the 134 area to go short the British pound. What are your thoughts? Sorry, Irene, you're going against David Warner, who's Mr. Optimism bullish on the British pound, but we will still give him some analysis here. What are your thoughts on that one?
Actually, I don't know if Irene got into the short because it did look 130. Oh, 134.
Yep.
I don't know. I'd be really nervous about it. It's almost like it's typically I do see what she's saying right there, but it would kind of go against my trade. I don't know what she's trying to get out of this, but like you have 34, your next current level, it's like 34 to 3150, but like I am really kind of playing this one to the upside. I don't really know what's going to happen. Like we still have, what is today's date here? Today's the 11th. Yep. So the idea of like it coming up and hitting 34, you have basically till the 19th. I really do believe they have to. I'm really, really hoping for a deal. I mean, the current president-elect Biden almost kind of forces Boris Johnson's hand to get more of kind of go more towards having a deal, because typically they would align Biden Biden more with kind of the European side of things rather than just kind of populist movement. They felt that if Trump won, that there would be a stronger chance of an actual no deal, because they just feel that he would align with their politics a little bit more. But and I think that Biden, just called the second call that he made to he talked to Canada first. Boris Johnson was number two, and if Brexit, finding some type of common ground and Brexit, getting a Brexit deal done was the big focus. And by the way, I got a new pup here.
Oh, look at the cutie. What's his name? Or her name?
This is Tina.
Tina. I'm guessing it's a girl.
Yeah. My daughter named her after Tina Belcher from Bob's Burgers.
Nice. Super cute. Yeah. Let me bring up my chart here just so I can add my 2 cents for Irene. Look, Irene, David's obviously a little bit biased here and super bullish on the British pound, and there's nothing wrong with that. I can see, since you're probably a graduate of OTA and supply and demand, it makes sense why you're looking at the 134 level, right? Yeah. That was that last big aggressive sell-off. Just, you always have to do two things. Number one, you have to look at a price chart and say, all right, what is the prevailing trend? As you can see here going back into March, it is without a doubt a strong uptrend. It doesn't matter what security this is. In this case, it's a British pound. It's trending very strongly. It looks like it's going to challenge that 134 level. So I could see your logic there. But remember, when you're looking at something that's trending up and you're looking to short it, you're actually capitalizing on what's called a corrective move. And those are usually shorter, smaller moves. It's the impulse move, which is in the direction of the trend, that you want to capitalize on. So I'm a little wary about that 134 mark. Certainly you could take a stab at it, but you better have your stop loss in place, because I agree with David. I think there's more bullish upside potential. What I do like, and this kind of lines up with what David was showing earlier, if you look at the 135 mark, that to me looks a little bit more appealing. It's kind of closer to that the quarter theory almost. It's 35, not quite, 25. But I might be looking at that one as a major point to potentially go short on this one. But all in all, I think the British pound looks pretty decent right now. The issue, David, and I think this goes right back to your talk track, was, deal or no deal. The no deal obviously just brings in this whole universe of uncertainty. A deal also, because when you hear deal, it sounds like, oh, everything's going to be fine, we're all going to move forward, everything's great. They could cave a little bit here, because Trump was really more aligned with Johnson in the UK. if Biden, president-elect, is there, then all of a sudden their UK safety net almost goes away a little bit. So like, okay, maybe we have to bend and concede a little bit here with the EU on some of these agreements. So even though they might make a deal, it might not be what people were expecting it to be under a Trump presidency. So it almost feels like this is could potentially be bad even if they get a deal.
Yeah, that's the real unknown. I think that you're going to have this regardless. I think when you get the initial, like, we have a deal, I'm hoping to see some euphoria. The way that I've been playing it in, like, not only pound crosses, but I thought kind of the euro crosses, euro crosses as well. As far as the dollar's concerned, like, the dollar hit a, like, 2-year low just on Monday. It was like in a 7th month decline. So like seeing some like dollar strength over here, you know, just kind of in the short term, maybe even just this week, I'm not really quite sure. Just as, you know, people start covering their shorts. Right? But I think like this currency, I'm going to share my screen again. Like Here we are, just like, we're looking at this like pound dollar. This is almost like an elephant in a magnifying glass when I'm looking at this much data. But like if I pulled this over to a monthly and you just kind of look at where we are right now to, you know, where we actually have been in the past, like this currency pair looks cheap when you look at it here and you look at this as like, look how high it's been, you know, back in this time. And then you look at how high it has actually been relative to, you know, all the data that we do have. So, you know, here I'm only looking at it, you know, kind of a nickel at a time. I don't have a crystal ball, but I'm assuming like I'll probably hit $1.35, I think, hopefully before the end of this year. But to go back to, and I don't know if you remember, I was in the office with you when the Brexit was first announced.
Yeah, we did a special show. That was fun.
That was awesome. That was amazing. But this is the biggest candle, monthly candle that you can see, you know, really since Brexit. There was like some follow through. This was obviously, you know, crazy weird meltdowns. But the idea of even getting a Brexit deal, like right now I'd be playing it like $1.30 to $1.35. And as soon as I can start just kind of popping my head above $1.35, I'm going to go $1.35 and I'm going to try to hit 140. And it's just this whole like it is kind of just this optimistic way to play. I'm going to move this back down to the daily, but the risk reward is great. I mean, I did it with this one too. I'm always just kind of going, you know, you kind of do have to choose a bias. I choose biases based off of fundamentals. I'm not always right the first time. And, you know, it's like the only type of real trades I've taken on the pound have only really been to buy. I just don't feel comfortable shorting it because basically even the same things that you said. It's just like the overall, I would rather be on the side that goes with the trend. I'm playing the optimism. So it was like, you know, 50 pip loss, 50 pip loss, 50 pip loss, 50 pip, and then you get your 500. And so I'm trying to do that. I'm trying to do that with this one, you know, right now. But, you know, you have to really be careful. I'm going to unshare this screen. You have to really be careful, you know, especially like euro crosses and pound crosses. I mean, pound cross obviously is the big one, but like euro crosses and pound crosses, there's going to be just a surprise element that goes with the deal, however they take the deal. That's just like, you can't really just like, it's not really priced in. Right, you know, if you think of like when Brexit was actually announced, you think of all those people trying to catch bottoms on the way down. When Brexit was announced, the pound dropped 2,500 pips in one day.
That was
amazing. What I mean? Like, it's going to destroy accounts if you're just like trying to be like, you know, picking tops and bottoms without really paying attention to the fundamental, you know, backdrop of what's going on in the Eurozone.
I'm actually writing it on I'm adding some stuff to the screen here to kind of maybe make it more visual for the viewers out at home. I'm going to zoom out here just a little bit so you guys can see, you know, David brings up a good point. You know, how much lower is the Brexit going to go? I mean, it could obviously go much, much lower, but if you look historically, you know, this looks pretty extreme, and this goes back into 2007 peak that you see there. That's, let me just give the exact date. This is a monthly that we're looking at. On that monthly, it looks like December of 2007 was that peak where the British pound hit a high of 211.59. Now, of course, we're at 132 right now, but if we zoom out even further, this is where it looks interesting to me. you look historically, I mean, where we're at right now is dreadfully low compared to where it was back in the 70s. We're 50% off. Now, of course, yeah, that's a long, long, long time ago, but it could certainly move back to the upside here. Consolidation is also a good thing for a price. It gives everyone kind of a moment in time to figure out which way it's going to go, and we could plan trades around this. Breakout trades are great at this point. You may notice also back in 1985, we bottomed out on the British pound, and the lowest that I've seen on these charts was 107, I believe, was the low point there for the British pound. So, it could go either way. The challenge with this one, if you are trading the British pound, is a ton of uncertainty. David mentioned the 19th as being kind of a line in the sand. I think, doesn't the whole deal have to be finalized by the end of the year? I thought it was the end of the year.
It is. The actual, it is finalized on December 31st, but in order to prepare for it or get whatever it is they need to do before that deadline, they say November 19th is now it. They said that it was supposed to be October 16th. It was we have to have it by then. And then they just I guess they're making progress. It's going in the direction that they wanted to see, but they're just been working kind of around the clock, to kind of figure this stuff out. So,
well, hold on. I gotta correct you right there. We know that no politician ever has worked around the clock, okay?
Well, their version of it.
They're bickering around the clock. They're pointing the finger at the opposite side of the aisle and pointing the finger at the EU going, it's your fault, but work? Right. Come on now, let's be serious here.
You're right. It's a slip of the tongue.
Yes. No, it's just funny because we would assume that our politicians are working in our best interest, but in many cases they're just sitting around bickering.
Right.
All right, so again, guys, you have to understand that's an inherent risk of trading the British pound or the euro for that matter. We could look at that as well. There was a question about the euro. But you just know when you're trading specific instruments that there are risk factors. This to me is a major one when trading the British pound. Is at any moment their party could say, we've reached an agreement. And you don't see Boris Johnson doing what President Trump would be doing, which would be tweeting out all these little updates along the way, which some people like the tweet updates. Other people think it's a nuisance. To me, it's still one of the riskier pairs out there with regards to unforeseen volatility on one announcement with the British pound. So be careful out there if you're trading that one. Let me see. Let's go to that second question here. That was the British pound one. Let's go back to Terry. Terry sent in a couple questions. Terry says, I listen to your podcast daily. Sorry I can't watch live. No worries. I know there's many people out there watching or listening to podcasts. I appreciate that as well. By the way, you guys can all subscribe to that one. That helps as well. I opened up a short position on the yen on Monday at 105.50. It started down but bounced back up today. Should I hold it? Well, my immediate question is, Terry, what was your plan? Because now you're asking us to evaluate something that you're in. There should have been an initial plan. Let's look at the 105.50 on USDJPY and see what we think about that one. I have it on a monthly right now.
Short?
What's that?
Is this a long or short? You said they went long yen. Does that mean they're long the dollar or are they short the dollar? We'll talk about the pair.
That's good. That's a great question. I don't know. Didn't really identify it in there. Let's see.
Yeah.
If I go to the daily, you can probably see it. Oh, okay. I'm guessing he's talking about the USDJPY because look at, and I understand why. I can see this, Terry. You have price in the last, obviously on over the last few days has ripped back up into that area supply right around 105.50. And I can see why you would open that position, right? You're in a downtrend on the USDJPY. It's been in a downtrend since March. Lower highs, lower lows. Generally, if you're looking to go short and capitalize on a downtrend, use short retracements into supply. And I would say, Terry, not bad. I think that's probably a decent trade. Again, I'm always an advocate of solid stop losses so you don't get blown out of the water on another big move. But is there anything else in the world of the USDJPY that we might want to pay special note to here?
This is not typically a pair that I personally... I'm going to take the screen if that's okay.
Yeah, do what you got to do.
Okay.
I thought you loved the yen.
Well, I love the yen, but not really the yen against the dollar.
All right.
The reason for that is that they have the same profile. They typically are both they're two risk aversion currencies. So typically they go up against things together and they go down against things together. So it's not typically a pair that I love to make. But I'm not saying that this is what's going to happen. I would say a probably more bullish dollar than the Japanese yen. But you look at, this was the last, I'm going to scroll over right here, this candle right here. This candle, do you see it?
Yep.
I'm
with the long bottoming tail. Yep.
That was the election of 2016 right there. And you look at how the dollar performed against the yen afterwards. I'm not saying that that's going to happen right now, but I mean, it's just one of these currencies. I could see some like just dollar strength only because like we hit that 2-year low in the dollar index. But you know, I can see why they tried to short it here at this 105 level. But I get, you know, I play the market and it's an interesting way to kind of look at it. But it's like the whole idea is that if I'm, and it's, you know, it's not, obviously it's not a perfect system, but if I can get above 105, you know, I'm kind of looking at the market 105 to 106 or, you know, 106 to 107. So I typically don't just like, you know, just I know a big price. I know I've always said that before, but like right now that it's like above 105, like to me, like the next place, like if I was looking at a short term, 105 to 106, or even just bigger would be 105 to 107.50. But that's a tough one right now. It's just like going forward. I know if you're just playing pure like, okay, I'm just plotting just opposing zones and things along those lines, but just kind of that it's kind of forming and kind of climbing up there. Next stop to me is 106, which actually looks like a level kind of on its own as well.
Yeah, you know, it's funny. I like your chart. I mean, I'll bring mine up. I was going to read up yours, but I'll go to this one. You know, you look at basically the same thing that Dave was talking about. You do have multiple levels here that offer potential trades, and I totally get, Terry, why you chose that 105.50 mark. And you know, this is where we get just different styles taking into effect, because if you're a supply and demand trader, you can make the argument that 105.50 mark, there could be something there. But just like David pointed out, you could go to this 106 level and there's another potential supply zone, which wouldn't be the freshest because it reacted to something from back in September of this year. However, you know, we are in a downtrend, and when we're in a downtrend for a prolonged period of time, those things tend to continue. So I like the idea of shorting USDJPY simply because look at the picture. That picture is saying downtrend, right? So go for it. I got no problem with the 105.50. If that stops you out, maybe you jump back in and try again at the 106. But I think you'll probably do all right with this one. There we go. All right, what else do I have? Let's see. Another one from Terry. Terry, the podcast guy, sending all kinds of questions. He says, I never traded AUDNZD before, but heard you mention it. It's sitting right in a good demand zone. Anything I should know before buying it? What you guys should know is last night there was a rate announcement, obviously, for New Zealand dollar. We talked about that one. The rates didn't change, stayed at 25 basis points, but there was a pretty big move up in the NZD. I'll bring that one up here. NZD. And I'll put this on, let's say, a 15-minute time frame for you so you guys can see the picture over there. And it doesn't look like, it doesn't look like a lot happened but recently, but over here, this is 5 p.m. when that announcement came out Pacific time. Real big move up in NZD USD. It's giving back some of that right now. Now, the question wasn't about the NZD USD. It was about the AUDNZD. So I just wanted to tell the earnings piece there before I bring up AUDNZD. I don't trade this one either just because I'm afraid of cross pairs. I've got the daily up here, David. What's your thoughts?
I'm looking at the daily on my side as well. You know, this is another one of those currencies. I think both these pairs came in from the same guy, but you're taking two currencies that have the same profile. These are both commodity. So these are both commodity currencies. So typically against everything else, they'll either go up together or down together, and that's just the way that this one plays. So when you match them side by side, it's like who's running faster that day. I will say that the Australian dollar has just, or the RBA, Reserve Bank of Australia, has just entered into a tremendous quantitative easing program, which they have said they're lowering borrowing costs. And at the same time, and they quote unquote, they're looking to weaken their exchange rate over time. So the Australian dollar is one that I only really like, where I was playing the pound, where I only look for buys. The Australian dollar, I'm looking for ways to really only sell this. Now, New Zealand also, they had their statement last night, but they kind of left the door open for stimulus here. Like, they did nothing last night, and I think that's why the New Zealand just pop. But they did leave the door open. So it's kind of one of those currencies that it's like, this is like your last ditch here. But I could see this currency continuing on this downward, having this downward pressure, only because I know that the Reserve Bank of Australia is going to weaken, is looking to weaken their currency.
You know,
go ahead.
You brought that up in the past show when we did Power Trading Radio. There was many shows that you had come on because you were pretty regular on the program. But I remember there was probably, I don't know, 5-6 months in a row when you were on the program, you're saying, look, I said, David, tell me what the Reserve Bank of Australia is talking about. And you brought up the pages, and you're like, look, it says right here, our target is, 86.
Yes.
And you're like, it's going here. They basically said, it's like a Ouija board. And it's like, is Uncle Tim in the room? Y-E-S,
Exactly.
And you've made it a point in the past that they're very clear about their targets. And it seems like when they say our target is to bring it to this level, it's going to go there, so just play it.
Yeah, exactly. So it's like the Australian dollar, one of the things that Australia has had, what they have, what's happened to them is that, anytime our stock market does well, typically the Australian dollar does well. They thought that, and then they thought that, a Biden presidency was going to align ourselves a little bit more. We're not going to combat with China as much as we were under a Trump administration. So they thought that it would be positive for the Australian dollar. So you're going to have some things where it's like, you may have this this pops in the Australian dollar here and there, but you're not going to see the strength that we have been seeing, I think, in the Australian dollar. I think it may have if it hasn't hit its peak yet. I pulled up Australia AUDUSD.
Yep.
But if it hasn't hit its peak yet, I think it's very, very close to hitting that peak.
Well, it looks like it, and if you're looking at the daily chart, as I've got up here for the viewers out at home, you are coming up to that area of supply from September 1st. You've got a closing price which is right around 73, brings it close to the 0.75 mark, which I know David would look at that and be like, oh, it's a quarter mark. It's a quarter mark.
You heard? Yes, you better believe it, man. I've been showing the bejesus out of that at 75 to 70, and so on. But I think it's right now it's at this 72, 77, and I'm going to just take your screen here. I'm going to just take for one moment.
Do what you got to do.
Right now, it's if I can get back below this one, so here's 72.50, which is a big price that I like to kind of trade off of as well. But I can see I have these these are daily candles. But as soon as if I can get a candle underneath there, the idea is that I'm going to try to go to 70 at least.
Now, before you draw the next one, if you're using that 72.50 mark, which you're using it as a line in the sand to say if it gets down below this, then there might be some downside movement. Do you also look at that as, hey, this could potentially be the floor? Because if you notice the last 4 days, it's really just kind of been bouncing off it. Hasn't broken below it, kind of tiptoed across it. So does that maybe act as a sign of potential strength and could potentially be a buy point for you? I know it's...
That's 100%, but the thing is, and I didn't mean to cut you off.
No,
but,
go ahead.
Yes. What I'm saying is, absolutely, but I just don't personally, just knowing what has been going on with the bank, I personally don't feel comfortable with the buy. I feel more comfortable with the sell. If I'm going to buy it, I'd be going 73 to 74, 74 to 75 rather than, and I don't really and I'm always, I find myself more and more kind of when I place a trade, I'm really trying to get something out of it, you know what I mean? But it's right now this would be kind of bullish to me, and that's why it's I'm not really buying it, but as soon as if it breaks below, I'll try I feel more comfortable in a sell than I do in a buy. And I know it's I have this mass, oh, excuse me, I think I just left.
You're good.
Obviously, I have this like, I know we've just been talking so much about trends. I know since March it's just been like popping here to the upside, but like I don't know if this is like, is this kind of turning over now or like whatever. You can just see when it was here, we did get into just some kind of sideways weird price action, but I do like a sell more than I like a buy. And that's only because I know what their bank is trying to do, but we'll see.
Yeah, I'm kind of leaning that way as well. I know that Muhammad in here says I'm long AUDUSD, and there's nothing wrong with it, especially if you've been long because it's looking pretty good. However, you're this 4 days sideways action. You're at a supply zone at 73. You've got one above you at 74. If it fails to make a new high, then I agree with David. It kind of goes back to that point of, is this thing rolling over? You notice that it's already started to make new lows, right? The low that we achieved on November 2nd is lower than that low from the one from September 25th. So that said,
it's a lower high.
Yeah, it's making lower lows and lower highs. So, if that's the case, then typically what that means is this may be that point where it's going to start to drift back down and make a new low, maybe below that 0.7 mark. So, this is definitely something you got to keep your eye on. Who knows which way it's going to go? It's just about having rules in place and making sure you follow those ones. Kevin Martinez says, I'm short that AUDNZD. Kevin, if you're still here, I'd love a question. I'm curious what your thoughts are on this. I'm looking at that AUDNZD, and I agree with what David says. They're pretty much the same pair, so it's like, they're both the same breed of dog, which is slightly different characteristics. If you're short that one right now, you're short right at a zone. I just drew it on here between, let's call it 105.66 and 105.78. You're right in what would classically be called a demand zone on this one, and shorting right there to me is a little bit risky. So I'm kind of curious, have you been short or did you just open it? Because just opening a short position right now to me would be very risky. I would certainly wait for a break below the 105, let's say 60 mark before I were to jump in short here. But just curious, Kevin, if you're still with us. Does that play into you, David? Because
no, I see what he's. Yeah, I think I imagine he was shorter. I know who he's what I know who you're up right now. But like for me, like the target on this, if I was already short, like I'd be aiming for the big round number of 105. So it would be kind of something like that. But the thing with the Australian dollar is it does have a strong correlation to our S&P 500. So it's like, and when you're betting, and it's there's a little bit of a disconnect here, hopefully with like the just what they're doing with the central bank. But typically a bet against the Australian dollar is almost like a bet against the U.S. stock market at some level, which I don't mean to be a, stock market bear.
Hey, after a 400% rally, it's okay to be bearish.
I know.
It's okay.
It's wild.
All right, so Kevin says, I was short since 107.50. Okay, well, damn good. Keep riding it, brother. Well, you know what David and I are both going to say is make sure you move your stops down. He said his target's 102.50. You're certainly going to have a challenge at that 105 mark, not necessarily because of any, there is some demand there, but certainly as that thing continues to drop, move that stop loss down. But man, nice in at 107.50. Great entry.
I like it too.
Perfect. Ryan just sent this one in. I know you're a Forex guy. Do you look at gold? Do you trade gold much at all?
No. Okay. I don't, but I think, the thing is with gold, I could see gold making, listen, if I'm betting against the dollar, which I have kind of been, like, I don't really know what next year is going to bring, but
does anybody?
The crystal ball says dollar weakness, and typically dollar weakness is gold strength. So but like if I was looking at something like gold, I can pull up gold. Just give me a second here.
I can bring it up over here as well for viewers at home. There you go. There's your gold chart.
So, I don't know what his how he kind of views gold, but like typically, anything when I trade things, it's like I'm typically going from like, it's almost like a whole number to whole number mentality, where it's like I can look at something like, and for a gold example, you can look at it, $25 at a time, which means like if it's below 1875, going to 1850. Below 1850, go to 1825. So I play a lot of just this momentum at $25 at a time. If it's not, and so I'll just kind of like I'm going to take your screen here for a moment.
Sure. I'm actually putting all those levels on. It's going to be interesting how you have that 1875, which is, we've been bouncing between 1875 and 1850, but
yeah, so you still have it. Yeah, so it's like, even if you're drawing the levels, if you did it, you can see, like, if you just look at when it breaks above or below a $125 mark, does it get to the next $25 mark? Mm-hmm. And, you know, obviously you don't get there every time, but you'll see, like, if you can manage the risk and try to figure out a way where you finally get this, okay, I'm going to risk, you know, whatever it is. But I typically I don't really draw, me personally, I never really been good with, like, you know, this whole perfect proximal and distal lines and percentages of ATRs, because then, like, my risk to reward kind of changes with each trade. But if I said, okay, I'm going to have this size stop every single time, 50 pips for 500 or 20 for 100 or something along those lines. And you're just throwing water balloons or hand grenades at particular prices. And it's like, I go from this price to this price.
Right. You make it simple.
Chop, chop, chop. Yeah.
Yeah, when I look at this chart here, and this for Ryan, anybody else is looking at gold, you know, if you go back into the last couple of years in this program, we've been, you know, predominantly very bullish on gold. For me, that's kind of changed. You know, you look at the chart here, we're bouncing around on that 1850 mark, and I do still feel like there could be some downside movement. We talked earlier in the year about 1800 being the pullback point. The big issue here, I think, facing gold, and David brought it up just a second ago, is the Dixie, the dollar index. And, you know, the expectation is that we are going to get another round of stimulus, as Medic Mandown posts in there. He says, if and when the U.S. actually comes out with a stimulus package, would AUD be stronger than USD? Because USD is also going to be flooding the market with USD. If we get more stimulus, then yeah, the dollar should continue to drop. Unfortunately, it's basing right now, going sideways. I'm not very optimistic that we're going to get another stimulus package. I think the markets are probably going to price in the prospect of not getting one. If that happens, we might actually see some dollar strength. That could be bad for gold. If we do get stimulus, then yeah, dollar is going to continue to fall. We'll break through that 92 mark, and then I think we're off to the races to the next demand zone on that dollar. But to me, the dollar index is going to be the dog that wags the tail here, or the dollar will be the dog that wags the tail for our economy going forward, depending on what sort of stimulus we get.
The dollar's a tough one right now. You know, we talk about currencies that I want to be bullish on and I want to be bearish on. Like, I want to be bullish European currencies. I want to be bearish commodity currencies. So it's like, I don't really typically love cross pairs either, Merlin, but like, and I feel weird even saying it, but I've been trading things like pound Australia, pound New Zealand, because it just, you disconnect yourself from just the dollar, which is just the one that's just like, flip a coin, tails up, you know.
What's it like today? Yeah.
Yeah, exactly.
It's been a wild one. David, tell me a little. I know you got you have a unique style, and one of the things that I've appreciated over the years is meeting people and learning about their own unique way of doing things. I think the viewers understand that you like this kind of the quarter psychology, and I believe there's a huge value to whole number psychology, etc. Tell us a little bit about your signature series. I know you're doing one. I think it's coming up in a couple weeks or in about a month for OTA. What's that? What is in that course?
Yeah, it's the second week of December, and it's been 3 days. Like, basically, it's a trading strategy that's built more around price than it is around like structure. I try to use charts to basically prove it, but it's it's less analysis of like looking for clean and fresh and just say, listen, I'm getting in at one price point, getting out another price point. And then it's just more of like kind of playing a numbers game around these price points, and then just, and just hoping that, okay, if I do something enough times and my risk to reward is good, like hopefully if I'm doing something 50 pips for 500, like I've been showing you, chances are 1 out of 10 times you're hoping to at least get lucky once. You know what I mean? So it's a price point to price point, game. I do it mostly in currencies, but for those of you that are in other asset classes, I can kind of show you how it works in the other asset classes as well. I do showcases every once in a while for those of you that are in Online Trading Academy. And if you don't sign up for the signature class, if you want to get an idea of what it looks like, you can join me in one of the in just the signature showcases, and you can get an idea and a look at kind of what this trading style looks like.
And you can, if you guys want more info, you can always contact your local online trading academy. They get you all the info that you need. One last question here. This one is from Adam a little while back, and it's I'm going to say it's almost a subjective one, but it says, does David believe in the global currency equilibrium before a theoretical bank or currency reset? I saw a Forex trader making a hypothesis for most of the major world currencies all crossing to one before a reset.
Oh, man, we got a big... First of all, it's to get to something to that point. I imagine we're moving into like some serious breakdown. You're talking about probably like getting into like real war where you need like a reset that basically says who's the central bank of the planet right now. I'm hoping, crossing my fingers, that I don't see something like that in our lifetime, because in order for something like that, basically people would have to lose total faith in like every single, kind of fiat currency out there, and then just like reset, I don't know.
Do you have faith in fiat currency?
And every currency goes to zero, man. Yeah. It's just a matter of time.
It's unfortunate Brendan's not here, because the chat would be screaming up with his comments about the currency failing, and just, I think at some point what we'll see, here's my hypothesis, Adam. Probably in the next decade or so, we will be unable to service our debt. And what we'll do is we'll probably start to default on certain things. The U.S. will lose its credit rating. And then who knows what's going to happen. But I think it's one of the proverbial, the shit will hit the fan and these markets are going to go crazy. I don't know what that brings. The good news for me, and hopefully for all of you, is we will be more on top of our personal finances. And if everything does go to hell in a handbasket and we see markets drop 60, 80, 90% because the dollar is just destroyed in value, then we'll be capitalizing on that. And maybe even going into things like the yen or the pound or the euro or whatever the Amero currency may be at that moment in time. But I think a day of reckoning is coming in the near future. I say near future. I'm talking like maybe 10 years out, because...
Yeah, I'm hoping not. I mean, you have to look at the euro. Just the creation of the euro was the first step, I feel, like towards something like that. You have all of those little currencies, and then they all kind of became one. And I think it's like, and I think just the whole, the Brexit was kind of almost like a crack.
Yeah.
That this, they didn't have the currency, but they wanted to be part of that, agreement. And... I don't know. I don't know what would I do if there's only one currency on this planet.
Makes it easy. I guess it makes it easy to trade. But there wouldn't be, David, because you know why? As just pointed out here by Medic Man Down and Big Ab, we'd have Bitcoin.
I guess so.
We'd all be using some digital currency. All right, David. Well, hey, thank you so much for coming on. I will probably join you in one of your signature series showcase sessions, and I appreciate you coming on. Congrats on the new pup, and again, thanks for your duty to our country. You're always appreciated.
All right, buddy.
All right,
I'll see you soon.
Sounds good. Take care.
Me too.
Guys, that was David Warner. I call him the master of the quarter methodology, which is, it's not like it's proprietary to him, but he is one practitioner of a very unique strategy. And I think that we've got some nice fan support here from Medic Man Down and others talking about how they love that strategy as well. I think it's always good to look at people's different strategies and tactics. And again, David has a signature series. If you want to know more, contact your local online trading academy, and they get you more info there. Bitcoin, if that happened, Big Eb says then it would be Bitcoin 250,000. I disagree with you, Big Eb. I think that if that happened and the U.S. dollar lost all credibility and value, you're looking at over $1 million in Bitcoin, because people are going to be trying to find something to park their money into. I think that's when you're talking huge numbers. And again, that's 10 years out. Yeah, supply and demand, baby. You got to find something that's not going to be manipulated or funged, and Bitcoin is certainly a great one for that. Okay, let me go into some economic announcements here. I had a couple lined up. Well, I think one of them was for today. Is that right? I've got it set for it. I'm losing my mind here. Let's see. Let me show you this in full screen. This actually should be tomorrow. I had this one incorrect here. So this is what's happening for tomorrow from an economic perspective. So that's the 12th, not the 11th on your screen. Nothing really major here. We do have unemployment claims coming out tomorrow, and so far over the past few months, our unemployment numbers have been very good. Now, I'm saying that with the Barry Bonds type asterisk symbol right now, because when I say very good, 730,000 unemployment claims in a week is not good. But compared to what we saw back in February, March, and April, and May, and June, and July, and August, and September, and October, then it's really good. But we should, if you go back to historical norms, I believe we're looking about 200 to 250,000 in a week. So we're still well above, but hey, this is a great sign that things are getting back on track, which is a knock for stimulus, right? maybe the need will not be there for us to go through another round of stimulus. Obviously, everybody wants their checks, those of you who got them. But yeah, that's the number coming out tomorrow. Other than that, you have a tentative GDP estimate for the British pound. You have a lot of chairmen from central banks speaking. You have Bailey from the Bank of England. You've got Lagarde for the ECB. You have Powell speaking tomorrow. That's all going to happen around 8:45 in the morning Pacific time. So that'll be into the market open. So careful, that could create some waves. The only other thing, if you're trading crude oil, which has been pretty volatile lately, crude oil inventories comes out at 8 a.m. as well. Now, on the earnings front, this week kind of sucked for earnings, to be honest. There really wasn't a lot of big names. Tomorrow, you do have Walt Disney, Cisco, and Applied Materials. All of those are aftermarket close. Now, I left this one up here because look at the impact that Disney is getting hit with because of COVID. Whether that's the shutdown of Disney resorts, which I'm sure is a massive draw down on their earnings, but also no movie revenue because there's no new movies coming out, right? I mean, you have The Mandalorian, but that's on Disney product, on Disney's Disney Plus. So they're expecting to come out negative 68 cents, a pretty big pullback in their earnings. Again, these are the three major ones reporting tomorrow, and these are most of these are members of the major market indexes. Now, they're not going to be the game changers. They're going to move the indexes, but it could set the tone for certain technology, especially because Cisco and Applied Material are on there. All right. I think that's going to do it for me. We're done? Wow. I'm not sure what I'm going to do tomorrow, guys. I told you that there's this guy on Twitter who's using TraderMerlin with 2 I's, and he's spamming some people. He's going to whoever's my friends on Twitter, trying to get them to send money, guaranteeing rates of returns, and spamming for a cryptocurrency exchange. So just to be a jerk, as I can be sometimes, I may title the show tomorrow very awkwardly, so don't worry. What I'll do is probably do the first 5 or 10 minutes just going after this firm and telling everybody that they're a scam, that they're a bunch of scumbags, that you should never do business with this firm, and I'm going to tag the hell of it on YouTube so that as many people see this thing as possible. Because honestly, if someone has to clone somebody else's Twitter feed to go and solicit people to open an account at a brokerage firm, that's a scam, and those are scumbags, and they deserve to be made fun of. So I may do that as the start of tomorrow's show. Not really sure what the show will be about tomorrow. If you have a specific topic you want me to go over, I'd love to do it. Just let me know what it is. You can send it down below the YouTube page here. Just go down below the video, type in what you want me to cover on tomorrow's show, or go to TraderMerlin.com. You can send in your questions there, as many of you have been doing. Again, Terry, Irene, thank you guys for the questions out there. I do appreciate it. Actually, you know what? Before I'm going to save Otto's question for tomorrow. I think that's actually a perfect question for tomorrow, so I'll save that one. All right, that'll do it for me, everybody. If you like today's show, if you like David Warner, click that thumbs up. If you want to take his signature series, I would encourage you to go to Online Trading Academy. You can click contact Online Trading Academy and talk to them about David Warner's signature series. As you can see, we have some fans of it in the group. Hopefully, you guys will enjoy that as well. All right, that's going to do it for me, everybody. Have a fantastic day. I will see you mañana. Take care.